Good evening. This is the Elliott Wave update for the NASDAQ 100 for Wednesday, August 3rd, 2022. The markets did power higher today, with the Dow being up over 500 at one point, the NASDAQ being up closer to 390 at one point, the S&P up close to 80 at one point, et cetera, et cetera. And what that has done, and I must add at that point also that the volumes were light. So it is definitively summertime trading. And so I think that added to the gain simply because we had an absence of sellers. They weren't going to sell it here. And so they moved. They just had to move the market because the buyers needed to be filled. So it did allow me the opportunity to switch over and show the alternate view. So the second of the two, I've been running with the first one, and that was where this would be minor wave 1. Then this is a minor wave 2 of the intermediate wave C. And the alternate is the following. What we're showing right now is that these move up to minor, and the intermediate wave C completed here at 11,068. And in turn, it completed the primary A wave. Now, if that is the case, then what we are tracing out right now are the beginning stages, an intermediate A wave of a primary B. And it would be a counter-trend rally. So within that initial intermediate wave A, it seems pretty clear, but it could be that instead of being an ABC, this is a 1 and a 2, and then we get a 3rd and a 4 and a 5, and that then would be intermediate wave A of primary wave B. And then we get, so that the whole B wave would be more of a zigzag. Instead of a flat, it would be a zigzag. This way, it allows the market to form the A wave, and C will always be 5 waves. I'll get to that in a moment, but it would be ABC for intermediate wave A. The B wave would then be expected to likely come down back towards the low or the starting point of wave A. Therefore, the flat A goes up, B comes back down, and then C goes back up. And it basically stays within a range. So that would be a flat. With the zigzag, goes zigzag. And so we get a 5 and a 3 and a 5. And so we have to leave that open as well, that this is a 1 and this is a 2. And we're now subdividing actually within the 3rd, but we're putting in a 3rd wave. And so so instead of being a minor ABC, it would be a minor 1, 2, 3, 4, 5 to form intermediate wave A. Okay, so under either count, we're in the 3rd. Let's go there. And we are at the top level tracing out a primary degree B wave. That's a counter trend rally. And it will also take the form of an ABC structure. And we're within that first A, as I've just gone through and described. And outside of what these may be, that's yet to be determined. But we're going to be looking right here at what's going on here. The secondary reason that this came in at good timing, because I wanted to show this today, is because of our trading activity. It was very strong. It pushed above a level that was okay and fit both counts that I'm running together. But when I saw that it was subdividing in the 3rd, it really gave me pause, because it ups the levels to where the expectations for this A wave or minor wave 2 to complete. So that brought that about, so I can show the whole process. Because remember what I said, that the A or the minor 2 can both travel almost to the same levels without invalidating either possibility. But it would be what comes next. So in other words, the minor wave 2 could not go above 15,303. And the primary B wave can. It can go above 15,292. So we have limitations on height before one would take over the other and it become invalidated. Unfortunately, that's it. That's the point. So we're going to run them both together, and we'll continue to be looking at what happens at those different levels on both. Today, I'm going over this particular count. Our day-to-day, that's going to be the same. But what it builds into, let's go over that now. So again, this wave is subdividing. So let me, oh, come on. Does this, and I got to hold this, and come on, don't. It's such a trip. It does that. I'm not sure. I don't know if it's my mouse or what. There we go. Okay, so we got the A, the B. And then we start 1, 2, and then it actually goes 1, 2, 1, 2. And 3, 4, 5 of 3. So 1, 2, and then 1, 2, and then 3, 4, 5 of this 3, and then another 4 and a 5. I know it doesn't look as clear there. Let's go back out to the daily. Let me see if I can blow that up and I can show you. 1, 2, 1, 2, 1, 2, 3, 4, 5. Now that produces this 3. Remember, of this larger 3, we had 1, 2, and then 1, 2, 3, 4, 5, the 3, and then we're going to do a 4 and a 5 to complete this 3. Okay, so 1, 2. We're subdividing 1, 2, 3, 4, 5, subdivision over. That's wave 3. So we go 1, 2, 3. We're going to do a 4 and then another 5, and that's going to complete the 3. Then we're going to do another 4 and another 5 to complete the larger. So we have more upside to go in my estimation, based on this trading activity, based on this price action. So it does open up a lot in terms of what can we expect. A lot of people, if we thought they were looking for the bottom here, they're all looking for the top here. And I'm not sure on the importance of why that is. Everybody's waiting for the next downside as much as everybody's waiting for the next upside. And so they want to catch both. And I don't think that's more as important as just trading the price action what's in front of you, and you'll catch all of it. And trading it not with a bullish or a bearish bias, but just trading it against your levels. And your levels are going to come to, because you got moving averages that help you define them. We have Fibonacci basically that helps to truly refine them down to very specific levels. And we know that they work because that happens often, that's the level, boom, and then we go to the next. So, and then Elliott. Now I'm adjusting the Elliott, and now we're looking at a different angle, but it really carries. Both counts carry the same potential, except if this is a minor 2, the previous, it cannot exceed that high. Whereas a intermediate A wave or the primary B wave can exceed this high and continue. Now, so again, short term and for tomorrow, I think the upside continues, but believe it or not, I believe we need to do a fourth wave. And even in here, you can see that this little fifth that's coming in up here, that it's trying, it's 1, 2, and then we got all the subdivision. That's a 3. We get a 4. Maybe it falls down to here. Maybe. But if it gets down to here, it's starting to interfere. So I really wouldn't be looking for this before we went up and made a new high. Once we make that new high, then yes, that's a complete structure. From there, we got 5. And then we have a possibility of dropping back to it before we put another leg in. So we'll follow the count as it happens. But that's how these come into play. So when this, I would think we should get a little bit down closer to 13,200. I mean, that's not bad. We got from 28.78, I think it was that was the low. And yesterday in Globex. And today we had a high of 13,310. So it's quite the move. But look for a 4. Then we do another 5. And once you have that 4, you can run Fibonacci extensions from the start of the third, which I'm going to say is right there. You run it up and then down, extensions, not at retracements. And you run it down to the bottom of 4, and you will get your extensions, your Fibonacci extensions for what this 5th wave should look like to complete this little 5-wave move here. So that does that. Take it out to the daily, and we're looking at a 4 and a 5. We likely will get closer to 13,575 in my estimation before this 3rd wave is done. Then we're going to get another 4 and another 5. And then we'll estimate once that takes place. But tomorrow I would be expecting a little bit more. And then we're looking straight into expiration. And Lord knows what the bigger players and the larger firms are looking at and what they're thinking where they want to have that expiration. That'll all be made clearer as we get closer to Friday. So for tomorrow, I'm looking for additional upside. A little bit longer term, I'm going to spend just a few more minutes here on this particular count. If we get a zigzag, then we're going to get up into here. An A, a B, a C, probably up into here. If it turns into a flat, you can just basically think it's going to be there. Now, in the irregular B wave, what happens there is like we would not be expecting the B wave to go up and move to a new high above the start of the primary A wave. But an irregular B wave can. And it creates a situation that I believe this is what Elliott was talking about. He talked about that there are times at major tops, at major highs, that the market will double correct it. Well, there's the first correction, then we get a B wave, and then it crashes. There's the second correction. And we've seen it. We've seen it in the past. We've seen it happen. And what that intervening rally is an irregular B wave. And those Fibonacci's that go along with that are here, right? So we would be measuring the A wave, but we're measuring the B wave against the A wave. And in that case, the B wave comes in at 1.236 times the length of A, or 1.382 times the length of A. And those are those numbers. So yes, they're there. And here is my point. I am not by any means saying that that's what's going to happen. I am just putting the information out there to say, hey, this is what an irregular B wave could do. I'm not looking for it. I got to let the market tell me. Right now, the market's telling me it's just probably going to get up to 13,500 and then drop back and maybe get up to 13,900 to 14,000. Which puts another notch in the belt that it is more likely the completion of the intermediate C and the primary A, and we're in that primary B beginning. Okay, so I'm going to ask that everybody have a really great trading day tomorrow. Continue to follow your moving averages. Continue to follow the price action. You may come up with a number when you're running your fibs. and where you're connecting them, you'll see these numbers. They do come in. We had them all stacked last night. And again, we're connecting points where here, I was looking for that fifth wave. So I can do it again because we got part of it, but I don't know. So if I'm going to, just to show you that we're going to look at this, if I'm looking here, I go up and I go there and I go there. And now I'm looking for what is my potential? Well, 100% is 13,800, right? 13,800, 13,600. That's what comes in when we're doing that type of calculation. So if the market continues to go up under light volume, that shouldn't be a problem. We were up 300 plus today. So if we got up another 300 plus, here we are, we're up here. And we're touching that a daily 200 at 13,575 should be major resistance. It coincides with the level that could be reached with a Fibonacci number as well. So nothing is discounted at this point. Use your fibs, use the order flow profile, the market profile, to look at where your points of control are, where the developing are, where you might have naked points of controls, extended points of controls, extended value area high, extended value area low. They'll print and march right across your chart. And keep those in mind. The market does go to those levels. Those are supply demand. Those were value either has been in the past and maybe again. So put them all together and you have a great trading day tomorrow. And our next update will be on Thursday, August 4th.